Good day everyone, we are the Group F. Today we will be discussing and presenting our solution to our assigned problem, problem number 5, which is about property, plant, and equipment. My name is SHERYL QUIOBE, and together with me are KEANNAH LAGROSAS and Hiede Magangcong. Before I begin, let's take a look at the table of contents to give you an overview of what we will cover. First will be the presentation of the problem, followed by the presentation of the solution, and lastly, the reference to the relevant standards. So let's start with the presentation of the problem. So I will be reading our assigned problem. You noted during your audit of the Karanglan company that the company carried out a number of transactions involving the acquisition of several assets. All expenditures were recorded in the following single asset account identified as property and equipment. The expenditures recorded under the account are acquisition price of land and building for $960,000, options taken out on several pieces of property $16,000, lease price of machinery purchased for $318,400, freight on machinery purchased $5,000, repair to machinery resulting from damage during shipment $1,480, cost of removing old machinery for $4,800, driveways and sidewalks for $102,000, building remodeling for $400,000, utilities paid since acquisition of the building $20,800, and all of that for a total of $1,828,480. Based on property tax assessments which are believed to fairly represent the relative values involved, the building is worth twice as much as the land. The machinery was subject to a 2% cash discount, which was taken and credited to purchaser's discount. Of the two options, $6,000 is related to the building and land purchase, and $10,000 to those not purchased. The old machinery was sold at book value. Now for the questions. Based on the given information and the results of your audit, determine the adjusted balance of the following. First, the land, building, and machinery.
Now, let's delve into the presentation of the solutions. In the first part of the table, we can see here the allocation of the purchase price of land and building. Since it was stated that the building is twice as much as land, the fraction that we will be using are 2/3 for the building and 1/3 for the land. By multiplying the fraction 2/3 with its acquisition price, we will get the allocated cost of the building, which is $640,000. The same goes with getting the allocated cost of the land. Multiply the fraction 1/3 to its acquisition price, and we will get $320,000 allocated cost of the land. The journalizing entry of this purchase, to be able to visualize it more, would be debit to land and building of $320,000 and $640,000 respectively, and a credit to cash of $960,000. Second here is the allocation of options paid on property acquired of $6,000. The $10,000, which is not related to those not purchased, is considered as an expense. To get the allocated cost of options paid, we will be using the same fraction that we used earlier. 2/3 for the building and 1/3 for the land multiplied by 6,000, and we will get 2,000 for land and 4,000 for building. The journal entry for this is a debit to land and building of 2,000 and 4,000 respectively, and a credit of 6,000 cash. By adding its purchase price and options paid, we will get the total adjusted balance of $322,000 for the land. Cost of remodeling a building is also added as it is capitalized as the cost of building. Now, by adding its purchase price, options paid, and the remodeling of the building, we get the total adjusted balance of $1,044,000 for the building.
Next is the cash price of machinery purchased. Since our list price for the machinery given in the problem is 318,400 pesos and is subject to a 2% cash discount which was taken, our 2% cash discount taken is 318,400 multiplied by 2% equals 6,368 pesos. This then will give us a carrying amount of the discounted purchase price of 312,032 pesos. And another way to get this is to simply multiply the list price to 100,000 less discount rate of 2%, hence 98% multiplied by 318,400 equals 312,032. The journal entries for this machinery purchase is first a debit to machinery and a credit to accounts payable of 318,400. Next, since the problem stated that discount was taken and credited to purchase discounts, we will have a debit of accounts payable of 318,400 and a credit of 312,032 to cash and also 6,368 credit to a purchase discount. Given our assumption of reasonably wise management, it is expected that they would seize the opportunity to benefit from a discount. Consequently, when an asset is purchased on account with a cash discount, the amount will consistently be the invoice price minus the cash discount. As a result, we recorded a debit of 6,368 for the purchase discount and credit for the machinery. And adding the freight of the machinery purchased of 5,000, this will give us a journal entry of 5,000 to machinery and to cash.
And that will result to 317,032 pesos, the adjusted balance of machinery account. Now presented here are the expenditures not capitalized. The repair to machinery resulting from damage during shipment is treated as expense and entered into an appropriate expenditures account, such as the journal entry shown, debit to repair and maintenance account, and credit to cash of 1,480. Cost of removing old machinery. The removal cost not previously recognized as a provision is charged to expense, with the journal entry of debit of loss on removal of old machinery and credit to cash of 4,800. And utilities paid since acquisition of the building is not capitalized and is treated as expense when incurred, with a journal entry of debit to utilities expense and credit to cash of 20,800. And lastly, driveways and sidewalks are land improvement, which will have a journal entry of debit to land improvement account and credit to cash for 102,000. So our answers for the adjusted balance is A. 322,000 for the land, D. 1,044,000 for the building, and A. 317.32 pesos for the machinery.
Let's move on to the reference standard for this problem. Our reference standard for solving this problem is PAS 16. The land, building, and machinery in the problem fits in the definition of PAS 16 of property, plant, and equipment, which are tangible assets that have physical substance, used in business that are held for use in the production or supply of goods or services, for rental to others or for administrative purposes, and long-term use that are expected to be used during more than one period.
PAS 16 further states that an item of property, plant, and equipment that qualifies for recognition of an asset shall be measured at its cost. The cost of an item of PPE comprises first, its purchase price, including import duties and non-refundable purchase taxes, after deducting trade discounts and rebates. Second, any cost directly attributable to bringing asset to the location and condition necessary for it to be capable of operating in the manner intended by the management. Lastly, the initial estimate of the cost of dismantling and removing the item and restoring the site on which it is located, for which the entity incurs an obligation by acquiring or using the asset other than to produce inventories. The item that we added as cost of land, building, and machinery, such as the purchase price of land and building, freight, and machinery, was all based on the reference standard, the PAS 16. That would be all, and thank you.